Usually in an economic collapse, the only thing that saves you in the past has been precious metals. It may not be the same way this next time, I don't know.
Yeah.
But it certainly won't hurt having some precious metals.
Are you frustrated with the current state of the silver market? Are you ready for true price discovery? Today, we have a special guest, David Morgan from the Morgan Report. He's a respected voice in the precious metal sector. David, welcome to Ron's Basement.
Ron, it's great to be here. Thank you.
Well, you've been studying the silver market, and I imagine you look at the gold market as well for many years. Are you frustrated right now with the silver price in particular?
Yes. Oh, yeah. It's unusual to see gold breaking out to new highs. I would say it's unusual, but it's frustrating to see gold breaking out to new highs and silver not doing very much. Although, if you go back and study the markets, it's not that unusual for this to take place. I used to think when I was trading futures and not as much experience as I have now that silver leads gold, and it does sometimes. But there are times when gold leads silver, and this is definitely one of those times. I think one of the biggest drawbacks for silver, as far as getting recognition, is that it's really a retail market only, whereas gold is
Mhm.
an establishment metal. Now, the establishment will not tell you it's an establishment metal, but you and I both know central banks have been buying gold hand over fist for the last couple of years, and all the major central banks hold gold on the balance sheet. And after Basel III, it's considered a tier one asset, which means it's as good as cash. Well, I got a news for you folks. It's a lot better than cash. Cash will burn in a fire and gold doesn't. But regardless of where gold stands, it really is a mainstream investment, although it's sort of a pseudo mainstream investment because Wall Street never promotes gold. They promote stocks and bonds. Silver, on the other hand, has no monetary value to the banking system. It does, of course, to people in general worldwide, but it's been pushed into it's an industrial commodity only mean for a very, very long time. It's not true. It's both money and industrial commodity. And if you let me go on here, I'll just explain something that most people don't really understand. I mean, I remember I was at a gold show or a investment conference years ago, and one of the more well followed gentlemen was speaking, and he said, "Silver is not money." And some of my fans came running over to me, and so and so said silver isn't money. Well, I don't care what he says, you know, just because you say, white isn't white or yellow isn't yellow or, water isn't water doesn't make it so. Anyway, I digress. So silver is money, but you got to look at it. I think the best way to look at silver as money is to look at it from this perspective. Legally, it's money,
Mhm.
which is more important than emotionally or economically. At law, I could take 4 silver quarters into Walmart or into Safeway or into the gas station or the convenience store, lay it down, and they must give me whatever I'm buying for that 4 quarters. So it's money. It's still money. It will probably end as money. So that's the legal part of it. And if they don't accept it, it'd be like not accepting cash. I won't accept Federal Reserve note. And that's the prerogative of a private business. So I don't want to go down that rabbit hole. Now let's
Yeah.
look at it economically. Am I going to put 4 quarters that in fiat are worth about 10 times face? Am I going to take that dollar that's, in 4 quarters
Yeah.
that's worth 10 fiat to buy a dollar's worth of gum? No,
No.
economically, it's not money at face value. Now, economically, it can be money if you and I do a deal and I
Mhm.
give you 4 1963 quarters and buy your panda bear back. There's not panda, but your bear back there. And we agree you want the silver and I want the bear. And I made a better deal than you did, and you made a better deal than I did. That's usually a fair exchange.
Yeah.
So, but that's the point. So no one that has a brain that really works can say silver isn't money from a legal aspect. It is. It is.
Yeah.
There's no, but is it used? Of course not. Why not? Because economically, who's going to screw themselves and pay 10 times more than they should for an item because at the store they've got to use the face value of the coin.
On the
So
coin.
hopefully, does that make sense? I mean, it makes
Yeah.
yeah.
Yeah, and I want to throw in as well. It's my understanding that silver and gold both are in the U.S. Constitution and specifically mentioned as money, and that we are seeing, and it's hard to keep track, but somewhere between 20 and 25 states that have some form of either a legislation that's already passed or they're in the process of passing legislation. Do you follow that at all? Do you find that
Oh,
interesting
I
that the
do.
states?
Yeah, I just did an interview with the guy that invented goldbacks on this same topic. I was in Utah with a number of other people when the governor signed into law that you could use gold and silver in any transaction as long as both parties agreed. So if the owner of the Walmart or manager of the Walmart said, I'll take your 4 quarters for $10, but the problem is it's cumbersome because the price changes on a daily basis, on a minute to minute basis. And so where do you lock in the price? And there's a lot of factors that make it cumbersome. But with a gold and or silver back debit card, it can make
Yeah.
the transaction pretty easy. And that's what my friend here in Spokane did. He locked
Mm-hmm.
in a gold and silver debit card so you could spend it. So the vendor, it's transparent. When I come to
Yeah.
your shop and I put the debit card in the machine, it debits out, $22.87. And the agreement is with the bank is they'll debit out 22.87 in the close of the London fix that evening. So
Okay.
there's no ambiguity. I'm not, oh, I didn't get, the midday quote. And in the long run, it doesn't matter,
Right.
really, because it all averages out pretty well over over a few months, a week, a couple of days. But so there's that. And there's these there's other ways to do it, but
Mm-hmm.
you can get it. It's just using like we used to with, coins. You can do that. I mean, it's legal, it's outlaw, but it's pretty difficult because where do you get change in? Fiat? Okay. I would accept fiat and change. I would try to make it as easy on the
Yeah.
other party as I possibly could, right?
Yeah.
So I'm going to give you 12, whatever, 2 silver eagles. So that's whatever, $50. And it's a $47 item. So $3, give me 3 in fiat. I'm out of here, kind of.
Right.
But
Yeah.
not everyone's that easy going, whatever. So it's a wonderful thing. And the one more step, and I'll give it back to you, Ron. I can't get
That's
long-winded.
okay.
It's with the cryptocurrency, that's the beauty of it. Because you could get down like the Satoshi, you get down to like 6 decimal points. So I
Mm-hmm.
can do it with crypto that's gold or silver backed and give you digits to whatever you want. There is no change due. I pay you $47.22 in silver and it's done.
Yeah.
And that's the beauty of it. So I think that's the direction we're going to go with the future of money. When I say future money, that's what I mean, gold and silver.
Yeah.
And then you could broaden it to, other cryptos or whatever. I think the ABDCs are where we're going to go in the future.
Mm-hmm.
Asset-backed digital currencies, not necessarily just gold and silver, but cobalt, oil, real estate,
Yeah.
anything tangible. But I really have a bit of a heartache with the general crypto market that it's just fiat on a digit, right?
Mm-hmm.
And
Right.
really there. And well, what good does that do us? I mean, that's the battle we've been trying to fight is you give your labor, be it physical labor or mental labor, or a combination thereof, for something that's created out of nothing that has no true value. That's what
Yeah.
I've been fighting my whole life. Well, why should I do that just because it's digitized and it's got a cute name on it? I mean, that's the problem. That's not the solution. But we can make the digital currency the solution if we put something of substance behind it, just like a piece of paper doesn't necessarily have value. But if it's a silver certificate and it's a warehouse receipt for something of value, it represents value. So
Yeah.
would I take a silver certificate? Can't change them in anymore, as you know, but excuse me, but at what time it was, I made a big deal out of it. Excuse me, at one of the conferences, and I held up a silver certificate. I said, this is not money. And it's not,
Yeah.
but it is a receipt for money. And at one time, you could go in, and I don't think I have one on my desk go handy, but I've got it pretty much memorized. It says this is a silver certificate on deposit in the U.S. Treasury. There is $1, and $1 of silver is not 1 ounce. The Treasury doesn't know that anymore, because when they mint the Silver Eagle, it says $1 on it, but it's actually 30% more than $1. The dollar is 371.25 grains of 999 fine silver. That comes out to about 0.77 troy ounces, not 1 troy ounce. But anyway, I'm off on a tangent. But
Now,
we are in the ability where you said, let's come back. And I'm going to do a podcast on this. And when I do it, I'll send it to you.
okay.
Because we got to get the word out. And I'm going to go through with really one of the guys that's done, in my view, the most work on this. And there's several that are working on it. The Sound Money, Citizens for Sound Money, but I forget the name of the outfit. But Stephen Gleason, personal friend of mine, and he's done more on the law side to get this into the states than anyone I know. And I need to do podcasts that go through every state that does it. And there's variances of what different states do. Some just accept it, like Utah. Some don't accept it for payment in full or final payment, but they don't tax it. So there's a lot of little nuances, but we're moving the right direction.
Yeah.
And that's important. And with me, with the debit card, I could spend that debit card anywhere in the country because it settles to the merchant in fiat.
Yeah.
But I'm spending my silver. So it's none of his darn business in a way.
Yeah. I love silver. I always have. And I know this for a fact, David. There's a certain percentage of the people that watch my channel, that are subscribers to my channel, that are this pure, hardcore, if I don't hold it, I don't own it mentality. And you mention anything about asset-backed digital currencies, anything about blockchain, and they just, that before you can even explain it, they say, oh, I don't want anything to do with that. I don't want. Now, I would put forth that, and Daniel Diaz at the Citizens for Sound Money kind of taught me this, that this idea of as you described it, a digital receipt, a digital currency, whatever, a blockchain-based asset-backed digital currency that is absolutely backed by physical metal, that it makes silver and gold, for that matter, functional again. And I would propose that if they get it right, that it could actually explode the demand for the metal. That if you made it functional, look, if you came to St. Louis right now and I wanted to take you for lunch, and I wanted to pay with I know you're probably like good food, so I'd spend 2 American Silver Eagles on you. We could do it, right? We'd have to get in my car, drive to the coin shop, I'd convert it into fiat, and we'd go have our lunch, right? But it would be a lot easier to do it in a much more seamless, functional way, like you described. And I implore with the people that are just so hardcore, if I don't hold it in my hands, it's not mine. It's like, well, it's if you can't use it and it's not functional, it kind of takes away from part of the appeal to it, or the long term, I would almost say, value. Because if you want to harvest that value, you need to be able to harvest it in an easy way. Am I off base on that?
No, you're totally on. 2 points. And number one, I'm only get to the first one is, as much as, first of all, silver is in the Constitution, and the United States is put on a silver standard, not a gold standard. If you want to learn about the background on that, watch the Secret of Oz. You can watch that movie, that documentary, for free on YouTube, Secret of Oz. But
Okay.
the point is that the silver gold ratio never got above 20 for thousands of years. Thousands. It's only been since 1873, really say 1900, the last 124 years, where the ratio has been above 20 several times. And now we're at 80 something. The reason it stayed 20 or lower is that both silver and gold had one function and one function only: money.
Yeah.
Money. It wasn't it wasn't for your flat screen TV or computer keyboard or your microwave membrane switch. It was money. Now, the only way we're going to get that ratio back down to where, not the only way, but the proven way to get it back down there is to use it as money. So if all you do is stack, you're not going to really help the cause. If you start to spend it, then you are going to help the cause, because now it's circulating, more and more people adapt to it, more and more people. Like, I give a discount if you pay me, so, right?
Yeah.
Not everyone
Yeah.
does, but in my business, I could say, you can pay me 500 in fiat, I'll take 400 in silver. Really? You get a 20% discount for using silver? Yes, you do. So that makes it more valuable because there's a big spread. There's a lot of reasons for doing that. But on the digital thing, not to harp on it, I look at it like this. I fully am, I try to do what I say. I walk my talk, and I'm free market. So if you got to hold it, known it, which is right, or the best way to look at it, that's great. But to go to no digital is okay. That's your wish. But I look at it as a tool in the toolbox. I don't have all my money in digital form. That'd be stupid. But I
Right.
have enough where when I go to the gas station, that silver I bought for 18 and now it's at 25, I'm getting a discount on my gas.
Right.
And it's transparent to the merchant order. So I look at it like a tool in a toolkit. I mean, if I'm an expert carpenter, I don't want to have a hammer, a pair of pliers, and a slot screwdriver. What if I run up against a Phillips head? I need another tool. So that's how I look at it. I would just try to open people's minds. You don't have to have a lot in there. The problem with the banking system is, and I kind of have to agree with them, and I don't love banks, as you well know, but if you open up a debit account, you're going to spend your silver or your gold or either one, and you never do it. Now the bank's got a carrying cost to keep that account open. So in the one system I'm in with my friend Dale, they've actually closed some accounts, and they don't ask for much. They ask for $1,000 turnover in a year,
Mhm.
which with the prices of gas and groceries these days, you ought to be able to turn over $1,000 a year pretty easy if you use it.
Yeah.
But if you don't use it, then why did you get it in the first place? So maybe I pitched it too hard. But the first point is, it's got to be used as money. The best way we can help each other is to spread the word by spending it. Spend it all? No. Is it undervalued? Yes. And maybe you're like me, where your average cost is probably around a little under 18 right now. I mean, I wish my average cost was 5. It's not, because I bought all the way up, right? So it averaged my cost up, not down.
Right.
But nonetheless, 18 is still less than 25. And I'm getting the idea of real money into real people. And
Yeah.
that's
Yeah. And I like to point out to people, just because we may have this digital option, that's not going to prohibit you from continuing to hold your stack at home, like you said, right? It's not like it's one or the other. Like you're going to be required to turn all your silver in. If you're looking to buy gold, silver, or platinum, do yourself a favor and check out Pimbex, the online precious metals bullion dealer and sponsor of Ron's Basement. I was a happy customer before they offered to support the channel. You'll find they have the best prices, quality, and service. I think Pimbex is best, and you will too. And be sure to tell them that you're from Ron's Basement. Sometimes it feels like, David, I've really been following the market closely, probably for about 10 years. Like, we'll never have a sustained bull market in silver. It feels like we're moving that way in gold. I know we've got cup and handle patterns that are breaking out and whatnot. But I want to implore to you, is it really possible that we could have a 5-year, maybe 10-year bull run in the silver market? Have you seen situations like that unfold during your career?
Yeah, yes, I have, but not, I wouldn't say 5 years. I mean, I, noticed the silver market when I was 11 years old. I mean, we went from 90% silver coins to the Cupro nickel coins when I was an 11-year-old kid. I didn't think a lot about it, but I knew damn well that the silver coins were worth more than these other ones. And then you quickly saw them disappear out of circulation because, Gresham's law took place. Good money gets hoarded and bad money gets spent. So The best one I can think of, Ron, is what happened in the Hunt situation. And that was January 79, silver was at $6. It's an all-time high. The monetary price of $1, remember 0.77 troy ounces is $1, not an ounce. So the 129, $1.29 an ounce is $1 in weight. So it went from the monetary price of 1964 to $6 in 1979. And it was beating inflation, but not by a lot. That was the all-time record high. It'd never been to $6 fiat ever. New high. A year later, it was 50 intraday, or 52 really, but we'll call it 50. 850% gain in 1 year, where it took like 15 years to go from $1.29 to $6. The part that people don't really know, and I had to think about it for a while, was that after the huge spike, exponential move up, parabolic move up, it fell back. There was Silver Thursday in March and all that. But the average price for silver of all of 1980, so 1 year, was $20.
Wow.
So I want you to think about that. The all-time high the year before was $6. The average price the next year was over 300% higher for the year. We're not talking a spike high for a day. We're talking an average price for a year. It's over triple the all-time high the previous year. So that's kind of what I see happening with silver again. It tends to spike and go, I would say, overvalued in those days. I mean, 50 then is like 250 now or 200 now. But regardless, I think it will spike. Gold did too. Both of them spiked. Silver far more percentage-wise. And then they'll settle down. It just, there's so many variables. But coming back, could we get in a 5-year bull market where it just kind of grinds up slowly, where we don't get these huge, as much volatility? We'll always have volatility, but not as much. Yes. And the reason for that is it won't be the emotionality that you see in the money markets or the investment markets. It'll be grinding up because of industrial demand. And that is forecast already. Now, whether it takes place or not remains to be determined. I mean, maybe they can replace silver with copper. I doubt it. There's been many proposals. I've read most of them. None of them really work to the degree that silver does. But anyway, if things go as anticipated, industry alone will basically eat up the silver market. So now what do? Anybody that's buying silver for investment purposes is going to drive the price higher. And there's not much manipulation that can take place on the physical side if every last ounce is used by industry. I mean, it'll just keep pushing it higher and higher, especially if they start getting the squeezes where, you know, they got to delay production for 6 weeks so they couldn't get enough silver to keep the factory. I'm not saying that's going to happen, but it could. So there's a lot going for silver. So we could get into a sustainable market. We could get in a market that resets like it did in 1980, going from 6 to 20. Unfortunately, the powers that be got a hold of enough silver to kind of reset it in their money management scheme, and they got it pushed down to 5 later on, in the 80s and 90s. But so I think I said enough. But unfortunately, and I've said this for years, and I really don't like that it has to be this way, but we are not going to see a free, fair market in silver until something breaks. Until there's a non-delivery or the COMEX goes to a massive settle in cash only with a big player. They do it all the time, the little guy. I mean, I've gotten emails all through the years of like, hey, David, I stood for 2 contracts, which is 10,000 ounces, round numbers. And I got a check, and my broker says there's nothing I can do about it. And I affirm that. Yeah, there's nothing to do about it. Read your contract. You agreed that you that you would settle in cash if your broker or the exchange decided to settle in cash. So how much of that has gone over the years? Probably very little. I don't want to make a big deal out of it. Most of the big settlement that want silver get silver. Most of the physical silver that swaps back and forth is between big bullion banks. It's not between the COMEX warehouse and Mitsubishi or Samsung or Apple Computer or some of these other entities that use industrial silver. Those are usually direct from the refinery to the facility, not coming through the COMEX. It bypasses it altogether. Not to say that some doesn't come off the COMEX and go into some type of industrial commodity. Fair amount of silver off the COMEX actually goes into coinage. They take the 1,000-ounce bars and then they melt them down and extrude them and stamp them and all the stuff they do to make it. But anyway, it's unfortunate, that silver market should be free and for all markets should be free. And they're not. And it's unfortunate because now silver is in a dynamic that it's going to force the price higher at some point. If you cannot make a profit mining silver, then why are you going to mine it? And that's basically where we are for the primary silver miners. And with an economic contraction, there's not as much need for lead, zinc, and copper, although copper guys will be making that statement. But in a big contraction, there'll be less need for everything. So silver's got a lot of dynamics, should be higher in price. I'll turn it back to you.
So what I hear you saying is, and we talk about this all the time, right? The supply of silver is, let's say, stagnant or decreasing. We know about the deficits. The demand from the industrial side is going up. So my question would be, could we see a confluence, right? None of us has a crystal ball, but it sure feels like that we could, let's say in the next year, 3 years, 5 years, see a confluence of factors come together where the industrial demand is increasing. I think it's safe to say right now in the West that investor demand for silver is somewhat subdued. That if we saw this confluence where industrial demand continues upward or even stays where it is right now, but we do get, let's say inflation takes off and people realize the Fed can't really fight inflation, and there's kind of maybe like what happened in the 70s, people look for another way to store their wealth and they rediscover silver. That if we do see an uptick in investor demand in the West, at the same time, increased industrial use. And I'll throw one more thing at you, David. Is there a new sheriff in town as the world is bifurcating and you've got the BRICS and the BRICS Plus countries? You have China with the Shanghai Gold Exchange. I think India's started an exchange for trading silver. We get these incredible demand numbers that are coming through for silver. I think recently in February we heard that India imported 70 million ounces. I mean, could it be a setup potentially that could be like a catalyst to break the paper market?
Yes is the answer. I just did this for my paid members. There's a gentleman named Matt Watson. I was introduced to him through the Silver Institute. And he has a chart that shows exactly what you said. It projects the mining and recycling of silver going from present day out to 2050. It also shows the projections for industrial demand being photovoltaic, the number one, but soldering, semiconductors, electronics, all that stuff. And it just keeps going up and up and up. And you get a crossover in a couple of years. Where the industrial side takes more silver than's available through current mining and recycling. So now you've got a built-in deficit going on. And from that graph, it goes from 2 years out to 2050. So that silver has to come from somewhere, and that's from above ground stockpiles. Now we have actually built the above ground stockpiles from about 2005 to the last couple of years, where I have to look at the next couple of surveys because the deficit is not always defined properly, in my opinion, If you're building above ground inventories, you don't have a deficit. Now, on paper, you could have a deficit because of the investor category and the amount used by industry, and there's a gap between those numbers. That's an accounting deficit. But as far as a physical deficit means there's less above ground this year than there was last year. And we had that from 1990 to 2005. We had 2 billion ounces of silver in commercial bar form. And after 15 years, we're down to 500 million. We ate up above ground supply 1.5 billion ounces in 15 years consecutively, year over year over year. The average drawdown was 100 million ounces. And yet the silver price at the end of that was only $8 an ounce. Now, if that happened in the wheat market, or it happened in the soybean oil market, or the cocoa market, you wouldn't see a low price in those commodities. But anyway, I digress. So from 2005 till the last couple of years, we've gone to probably 2.5 billion ounces. So we built up probably 2 billion ounces in commercial bar form. But if you look at, whenever there's a bigger supply, it can't be more valuable. You got to look at gold.
Right.
Gold always adds to the supply. Very little gets eaten up. And so it's constantly adding to the above ground supply. And yet the price goes up for gold. Why is it? Well, because gold is considered the ultimate money by the institutions and by some, investors. Silver, of course, is not considered money because you can't use it as money very easily. So back to your point, when you get to a point where industry's eating it up and investors want it because of inflation or gold costs too much, or there's ways to spend it easily with a debit card or a CBDC, or I should say CBDC, ABDC, asset-backed digital currency. I think there'll be more. It's just really education. And it's also the market itself. I mean, there's an expression that Jim Dines, who's one of the better known newsletter writers that was considered himself the original gold bug, he had an expression that once the ship is sunk, everyone knows how it might have been saved. And that goes to the gold and silver markets, because once the collapse happens, everyone knows they should have owned gold and silver. Yeah. It'll be a post facto, after the fact. People say, oh my God, if I'd only owned silver, I could have, fed my family or paid off the car for pennies on the dollar, or had my rent paid for a year, or whatever happens. And I'm not guaranteeing any of that, but usually in an economic collapse, the only thing that saves you in the past has been precious metals. It may not be the same way this next time, I don't know. But it certainly won't hurt having some precious metals. And that's another factor I just want to bring out real quick, Ron, and that's people learn the story. It's an easy one to learn. They find out they've been screwed their whole lives with this banking consortium that basically is living a counterfeit scheme at the force of government, because they force you to use it. And they make a decision that I'm getting myself on a gold or silver standard or whatever, and they go all in. Unfortunately, that's a mistake for almost everyone, because the price does fluctuate in terms of fiat. Everyone thinks in terms of fiat, and if the price is less than they bought it for, they're upset, as they have a right to be. I don't think of it that way, or try to train myself to think differently. I try to think in terms of above ground supply in my basement. And so I think if I got more silver this year than I had last year, I'm wealthier. Yeah, but the price was 25 last year and now it's 20. I don't care. I've got more silver this year than last year. I've got to be wealthy.
Yeah, I think I've heard other people say it this way, in a way that I try to, and it really is a process of retraining. I mean, I'm 54 years old, and you still wave a $100 bill in front of me, and my eyes are going to light up, right? I was trained that paper is valuable, but I know the reality is that when I think of my silver, that it's best for me to think of it in terms of ounces. I've heard people say that before. How many ounces do you have? And knowing the story, and to me, it's more than a story, it's a reality that silver has been valuable for thousands of years. And it's hard for me to imagine a scenario in the future where it doesn't maintain its value. And the other thing I want to throw in to circle back to what you were kind of finishing up with there is as I look at all these different factors and what could affect the price of silver, again, measured in fiat dollars as we go into the next couple of years. I think if nothing else, I can take solace in knowing that the real value of the dollar, I cannot imagine a scenario where the real value of the dollar doesn't continue to dilute, doesn't continue to devalue. Whether or not industrial demand meets expectations, or if the mining supply, right, because these miners, it doesn't, hardly anybody's exploring or developing silver projects because there's no money in it right now. Whether or not all that comes to fruition, the bottom line base that I can always fall back on is that I don't have faith that the dollar is going to go up in real value over the next 5, 10, or 20 years. It may, and then I promise I'll be quiet, David, it may on a relative value, right? The DXY index, may go the dollar's up, the dollar's down, whatever, right? That's comparing the three best cars on the cruddiest used car lot in my city here, St. Louis. But in real value, I know that no matter what happens, I'm confident that silver will hold more value than paper money.
Yeah, you're absolutely right. The depreciation of the dollar is near its final inning. We're probably the bottom of the ninth with 2 outs.
Fortuna Silver Mines is a global intermediate gold and silver producer. Since 2005, Fortuna's best-in-class management has delivered impressive growth and profits. Fortuna's solid financial position and operational expertise allows for performance in any precious metals price cycle and provides a foundation from which to harvest great profits in more favorable metals markets. Investing in Fortuna is an investment in quality, long-term, sustainable production of in-demand precious and base metals.
Look at the slide I just referred to. So very briefly going back to running out of silver on Matt Watson's chart. So he shows that 2024, we're basically at that exact point. All the silver mined and recycled is eaten up by all of industry and investment demand. But that's not true. We don't know what it is this year, but last year we knew we had a 200 million ounce deficit, round numbers, maybe 180, which means all the investment demand went into deficit. So the above ground supply should go down per the reporting, the two reporting silver people, CPM and the Silver Institute should show us that much, 200 million ounces are off the table. And so I've redone the graph to reflect that. And when you do that, basically from last year onward, all the investment demand is on top of the industrial demand, which is barely being met this year and next. And then by 2026, industry alone is going to eat up all of the silver supply. Yeah. So that, well, I shouldn't say industry alone with jewelry and silver. Okay. So it's unbelievable to think that we have that ability to see in the future projected and know that if you have some patience, I mean, someone your age, I would say it's an almost guarantee. I would like to think it's, going to happen this year. We get above 30, and once we get above 30, it's a pretty short trip to 50. There's not a lot of overhead resistance. There's not a lot of silver that was bought at 35, 40, 45, 50. I mean, there's some, but very little. So,
let me interrupt you. Let me interrupt you on that because I want to expound upon that thought. I try my best to explain that to my viewers that, like you just said, there aren't people out there that paid. I mean, there are a few, no doubt, right? A very few, but there's very, very few people who paid $40 for silver. that are sitting in their basements thinking, man, if silver ever hits 40 again, I'm selling, I'm done, right? It's not like, and we're in that situation with gold right now as well, right? Most people that own gold in US dollars, there's nobody who bought gold at $2,400 an ounce, right? Most everybody's in the money, and human nature is then to not sell, which if I have it correct, decreases the supply. There aren't a lot of sellers, that it can become a very attractive market for the metals. And with silver, like you said, and correct me, or I'd like your opinion on this. In my mind, I think of like 28 to 32 as kind of like the real all-time high in silver from that perspective, meaning that once we get to 32, 34 silver, there won't be as many people selling to recoup their previous losses or to recoup their money.
Yeah, I know you said it well. And just to reiterate what we talked about, I mean, if you go back to what we've said, the 1979 high of 6, and then 50. Well, David, you can't even say 50. That was an anomaly. It was a one-day market. Okay, I agree. It was a one-day market. It wasn't an anomaly, but yet it lived out that year at triple the all-time high. So 20. I mean, 3 times 6 is 18. So we're in a similar situation here where anyone, I think you got it nailed. I think between 28 and 32, technically. Once you get above 28, I like 30 because there's a psychological thing about round numbers of commodities, not just gold or silver, but oil or cocoa or cotton or any commodity. Once you get a number that's a round number, like 2000 pretty much is going to be the support for gold.
Yeah.
Could it hit 1987, 52? Yeah, could. But the psychological especially as time marches on, is gold's never going lower than 2000.
Yeah.
So once we get to where silver's never going below 30, then we've got a lot of people that are going to hold it. And like you said, markets go up and buying and selling pressure. So if there's no one selling at 30 because now they're in the money, then any new buying rises it higher. Now it's at 35. Now what do you do? Well, those people that held it at 30 are now $5 in the money. I go, oh, finally, I got all my premium back for those silver eagles I bought at $14 on the spot, right?
Yeah.
So I'm in the money there. I'm not letting them go. And that's what happened with GameStop. That's why they had such a great squeeze on the invest in the hedge funds, because those kids were not letting go. They were holding. And if there's no supply, then any little bit, it's just a little bit of buying. It's what's called the float, really, what's available immediately. And COMEX really doesn't have that much silver to squash the market. They only have the registered category. They have a little bit in eligible, but not much. Most of the eligible category is held by long-term investors. They're family offices, they're hedge funds, they're wealthy investors, could be industry. But so we have a lot going for us. I wish I could show you this graph. I mean, it doesn't, it's no guarantee. I mean, what he shows is that the mining and recycling is flat for the next 25 years. I'm not sure it's going that long, but I would give him it's probably going to be flat for the next 5. And I think we've got one heck of a market going out the next few years. And then depending on whether or not the bankers are able to reset us to their contrived control freak system, we could really see things explode. I mean, there will be people that get into it because they have to eat, unfortunately. And then there'll be the resistance as well. So it's going to be very interesting time.
Yeah. And to go along with what you said, you hear people saying, premiums are low right now. Most people think the silver price, the spot price is low. Premiums are very low, which is indicative of the fact that from the retail investment side, there's a subdued demand, especially in the West, right? Well, the silver lining that I like to call it is that on top of everything that we've talked about, silver investors like to buy when the price is going up. That if we get like the smallest uptick in Western investment buying in silver, that could be a big marginal source of demand as well. I mean, it's all I don't want to say dreams, but predictions of what could happen in the future. But if we do get that uptick, that really could be a silver lining for the demand profile.
Absolutely. And the other part is the algorithms. The biggest hold on the silver market right now, well, two, retail demand has fallen off, and wholesalers are holding a lot of inventory. In fact, I was in my coin dealer shop yesterday, and they're a pretty big dealer. I mean, Spokane was built on silver. I mean, all the mansions and the big businesses here were because of the Silver Valley being an hour and a half's drive that direction. I live right near the Silver Valley. Billions of ounces of silver came out of there. Anyway, I digress. But I talked to the owner, and he said I could get you silver rounds for 50 cents over all day right now.
Yeah.
So that's a very low premium, as you know.
Right.
So there's that. But it's the institutional demand that's not there right now.
Mm-hmm.
And that's unusual because the algorithms work on all these stocks and commodities. And the algorithms tell the other computers when to buy. I mean, a lot of this, what's called off-floor trading, used to have a human being behind it, and they'd press the buy or sell button. Not anymore. The computer tells the computer looks at what the situation is, and it buys and sells. And the parameters for buying silver are as good as any other commodity. In fact, on a fundamental basis, better than almost anything you can name.
Yeah.
And yet you don't see participation. So what did they do? Turn off that algorithm. Hey, turn off the silver algorithm, Matt. We don't want to be buying silver. Well, why not? Because we don't want the price going up. Oh, you don't? No, we don't want the price going up. I know that sounds totally conspiratorial because it is. But the fact is, why aren't these algorithms kicking in silver trading?
Yeah. Yeah. Well, they will, David. They will. Hey, thank you so much on behalf of myself and our viewer. I told everyone that you were a respected voice in the silver and gold sector, and you've proven to us during this interview that that's definitely the case. If people want to learn more about you, could you tell them how they could do you have a website, or how would they learn more about you?
Yeah, there's a couple of things. One is the main website is themorganreport.com.
Okay.
And I do more than silver. I look at the whole resource side, precious metals, but it's pretty much a precious metals oriented publication. There's a free one that I do the interviews like this I put out for everybody. And I am shadow banned. So a lot of people, unless they're on the mailing list, never see the 2 or 3 interviews I do every week. If you want to see them, get on the mailing list for free. I also have a paid service. You can go to the subscribe tab and you can subscribe or not. It's not for everybody. Most of your people are stackers. That's great. I love them. No need to go on the equity side. That's what I specialize in. On the About tab, it's my biography, which you can read or not. But if you scroll down, there's a movie called The Four Horsemen film. It's for free. I suggest everybody on your channel watch that movie on a weekend or time off. It's about an hour and a half long. Again, it's free, and it goes to the end of the Age of Empire. And what you'll see in that documentary is where we are in the greater scheme of things and why we're nearing the end game and why precious metals are more important now than ever. So that's it. And the last thing is I'm doing a documentary. It's called Silver Sunrise. And the landing page for that is silversunrise.tv. There's 2 trailers up. I've got trailer of G. Edward Griffin, preacher from Jekyll Island. He's agreed to be in the film. He's already in the can, so we filmed his segment. The script is done. You can read the script. It's on the website. We're interviewing Foster Gamble that did Thrive 1 and Thrive 2. If you're familiar with those movies. If you're not, everyone should watch those. Also doing David Icke, or interviewed David Icke, who most people know, and he's definitely the conspiracy king, probably. And he has a lot to say about the monetary system in the past, and we're interviewing for this documentary. So it's getting through the finish line at a hard charge. I was taught not to just finish, but finish strong.
Yeah.
And I want to. I've written 3 books on silver. One's Get Skinny on Silver. It's a primer. It's not really that great a book, but it's a nice warm up. The Silver Manifesto, which is my more or less masterpiece. It's almost anything you'd ever want to know about the silver market. And the last one is Second Chance. It's more of an investment. I've had people say it's the best investment book they've ever read. I wouldn't take credit for that. I'm just telling you, some people have said that. But I thought a documentary was a way to get further exposure to what's going on in the monetary system and why silver, among other things, are a solution for the problem. Because if we don't keep the money power in our own hands, the way the bankers want to take us is a more than an Orwellian nightmare. I mean, they want to be able to trace tax and basically control everything that we buy. And wouldn't matter. Money wouldn't be freedom anymore. You wouldn't have financial freedom. You could have $1 billion in silver. If they had control of it, then they could dictate what you could buy or when you could buy it or what school you could go to or how big your apartment size is or any of that stuff. And that's the direction China's already gone. And that's the model the central bankers want to follow. So it's rather scary, but it's not there yet. And people like you, Ron, are spreading the word. And the more we get silver into people's hands and use it as its ultimate form of money, not spend your whole stack, but anything you've got, or give it away too. It's better to give than to receive, and I truly believe that. You're going to give your kids something, or your grandkids, or your niece and nephews, or whatever. Give them a silver coin, or give them a half a ounce coin, or give them a silver quarter from the old days, or whatever. They're probably not going to spend it. They might learn something about real money. And if you learn about real money, you learn about reality. So I'll leave it at that.
Thank you, David. Again, on behalf of myself, the viewers, it's been great talking to you. And I certainly hope that I'll get to see you again here in the basement. Maybe the bear behind me has a blindfold on that says $2,500. We're going to take that off when gold hits 2,500. So maybe we'll have you at the virtual party.
Great. I'd love to be there. Thank you.
All right. Thanks, David. We'll talk to you soon.
First Mining Gold is a development company advancing two of the largest gold projects in Canada. Springpole in Ontario and Duparquet, located in Quebec, each already has 5 million ounces of gold reserves, but exploration initiatives are underway at both projects to find even more gold. First Mining is well-financed, has zero debt, and owns an interest in 4 additional Canadian gold development projects.